Hello, everybody, and welcome to the Fly the Flag podcast. I'm Mike Mfaraci. That's Jonny Fowler. We're a mortgage show talking to mortgage people about mortgage things. How you doing today, Jonny?
I am doing absolutely awesome. I just got back from Boca Raton, Florida.
Nice.
Honestly had the best meal of my life, and I've had a couple of people ask me, "What'd you have?"
Yeah.
Matt Schultz ordered at least 40 different things. You know, you hear about a 3-course meal, a 6-course meal. We had a 40-course meal in Boca Raton last night, and it was absolutely amazing. But I'm having fun, man.
I don't know. 40-course meals make me want to find an excuse to make the trip.
But see, you've got to. This is one of those.
Gotta get down there, man. If Schultz is just gonna keep ordering, then I want to keep putting it in my mouth.
Ordering. I'm telling you, there was 6 of us there, and the thing about it was we had everything from. It was the best pizza I've ever had in my life. It was the best shrimp I've ever had in my life. It was the best rock crab I've ever had in my life. It was the best steak I've ever had in my life. It was the best potatoes, the best everything was the best I've ever had in my life. And it went on for hours and hours and hours. And we didn't stop. And we're all sitting there like, we can't move. And then all of a sudden she comes out and says, "So do you want dessert?"
I was just going to say, what was for dessert?
Yeah, give us one of everything.
Oh, that's great. So,
it was beautiful.
So he sent you back home fat and happy, which is always good.
Oh, well, I want to say I got there fat, so he just sent me home happy.
What were you there for? Were you doing some more social media courses?
We weren't. There is, and I kind of find it hard to believe these days that there are still systems out there where branches can't operate off of a P&L. So there was a group that is in this bad predicament. And obviously I'm not going to say who it is, the company, anything like that. But so what they're going through, and this is something that I found out here in the past week that a lot of people are going through. Picture this. So one of the things that's good about Texas is we're always pretty steady no matter what.
Sure.
So in a lot of areas, you'll see the business go up, you'll see it go down, ups and downs and drops. We stay pretty steady. And then usually out in the suburbs, we never even see, it doesn't matter what's going on in the world, we're still buying houses kind of thing. Okay. And this buddy of mine is with a company that the only person that ever sees the P&L are these regionals or, even higher than the regionals.
Sure.
So picture this. My friends are having the best month that they've ever had in 17 years in the mortgage industry this month. Best month they've ever had.
Contrary to what many may believe at this point in time.
They got the phone call saying that they had to lay off one of their processors because the whole company is down. And because they're not operating on their own system, they're not getting rewarded for their own merits. So it is just a sweep of people have to get. So the processor has been with them for whatever it's been, 11 years or something like that. Can you imagine that? And the problem is because they're not able to operate without saying the word autonomously, without being seen as a whole instead of as an individual.
Those stories like that are what make me so thankful that I work for such an entrepreneurial company.
Yeah, no question about that.
And good segue here. This company is so entrepreneurial that they let somebody come in and just build their own construction and renovation division.
Dude, we've got the best there is. There's no question in my mind we have the best there is. I get this question all the time about, do you really have a one-time close? Do you really have rehab? Do you really have construction firm? Can you do this with FHA, VA, USDA? We've got the best there is in the country.
And we want to get all the answers to those questions straight from the horse's mouth. Let's welcome in my man, Bruce Smith. How you doing, brother?
I'm doing good. How are you guys? Thanks for having me.
Absolutely. Bruce is the head of our construction and renovation division here at American Financial Network. It's kind of his expertise, and it's really nice to have him on the show, especially now as we record this. It's beginning of November 2022. It's cold. It's winter. It's the holidays. It's the slow time. Rates are up. Mortgage loan officers everywhere are trying to figure out how to pay the bills and how to get their next loan. So that's the topic of this podcast: cultivating business with construction and renovation lending. And I want to talk to Bruce about this a little bit, about what you see being the main selling points of stuff like this, because a lot of people know about renovation. A lot of people know about the 203Ks, the Fannie Mae home styles, things like that. A lot of people don't do them that often, so they're a little scared of those products. Maybe you have some tips and tricks for them. And then the other thing that's been the hot topic of the industry for a couple of years now is lack of inventory. Well, if it's hard to find a home to buy, maybe you can just build one. Is that a possibility?
Yeah.
So let's get into it. What do you see construction and renovation being able to do to help today's mortgage loan officer in today's market, maybe help them steady the roller coaster, so to speak?
Well, I think we have the division leaders that always talk about centers of influence, right? And how do you tap into those centers of influence? Construction and renovation lending provides more center of influence than any other product that you can have, right? You look at it from a construction standpoint, you have a builder, you have a realtor, sometimes you have two realtors, you have the borrower, you have the tradespeople, there's so many people involved in that one project that if you do this one construction or perm and it goes well, you're literally around 25 or 30 people that may be like, I have a cousin who's interested in this, or I have an aunt who's interested in building a new house. Oh, you guys do it at this LTV. We've never heard of it. We've been building houses for so long. Renovation, you have the contractor, you have the two realtors, you have supply houses, right? Where are you getting your kitchen cabinets from? You can go to a kitchen cabinet company and say, you can post a sign that you can offer financing for your kitchen or for your flooring or for whichever thing, and then get business from that aspect. Because so now you're giving a kitchen cabinet company the ability to offer kitchen cabinets to borrowers for financing. Here, talk to my loan advisor about that. So I would say, starting off in this environment and almost in any environment, if you're looking to have more shots, right, more swings, at a chance of
more at bats. That's what it's all about, right? We're not looking for loans on a silver platter here. It's just getting in the batter's box and getting that at bat and having a chance. To help somebody out.
Just to help somebody out from any element. You need new windows, you need solar panels, you need a new roof, your deck is falling apart. There's just so many things that these products offer. That
the referral business aspect is really interesting to me, because you're talking about centers of influence. One successful transaction gets you in the eyes of a couple dozen people easily. Do you see that happening because so many loan officers don't have access to these programs, or is it because they're just gun shy and they stay away from the things that they're unfamiliar
I would say
with?
it's probably 50-50.
Okay.
These are the kind of products that if you have a bad experience, an LO will be like, I'm never touching it, right?
Sure.
And it's almost like, reputational wise, it's almost anyone who has a bad experience with a loan. If you have a realtor that brings you a person, and that construction renovation, regular FHA 3.5%, that processing experience is bad. That experience is bad. They walk away not just with that the LO is bad, but they walk away with the thought process that the company is bad. The most important thing about this is, from a referral standpoint, if you knock the process out when no one really can, right? There's just not a lot of experts in our industry at these products. If you knock it out, that's where the referral is, because everybody already has it set in their head, especially even from an LO standpoint. You talk about being tentative. They have it set in their head. It takes 60 days to close. You got to have X amount of credit score. You have to put an amount of money down. It takes this long. And then you add in, what sometimes turns out to be maybe a delay in compensation because it takes so long to close. and depending on how that company operates, when they get paid. So there's a lot of fear factors.
And that's the thing. Great term with fear factor. These are not things that are detrimental to the process. They are slight inconveniences.
Yeah,
that are overcome by a switch in thinking or expectations, right?
Or the right team. They're overcome by efficiencies, right? Mm-hmm. They're overcome by a process. I'm one. I say this all the time. I'd rather be slow and right than fast and wrong.
Sure.
I think in these products, if you're communicating and letting them know everything that you need, I've never met a borrower that if you give them everything they need and they give it to you and you close that loan and there's no issues, that they're unhappy with the process, even if it takes 5 extra days. But if you don't tell them everything you need and you don't meet the expectation that you promised them, then it becomes, I think one of the things that I try to be very clear about these loans is your success is in the expectation setting in the beginning.
Is this not the case on every mortgage loan?
Yes.
Like, there's a reason that the term under promise over deliver exists.
You've got to touch on this one. One of the things that I do know for a fact is since I've been here and working with this team and talking to this team, I get responses within minutes. And I've done this before at other companies, and I've had the systems where you broker out to certain companies and you don't get that response. You don't get that handheld. And one of the things, whether Bruce realizes it or not, when it comes across to somebody who doesn't know exactly what his widget is like he does, when it comes across, his team and his responses and his communication is knocked down to that third grade level to where I believe that not only will the borrower, the co-borrower, the loan officer, everybody understands it. The way that his team operates, and I've never asked him this, I've never asked how long they've been working together or anything like that, but you can tell that it's a fine-oiled machine. And the way that they respond and help people out, I think that's a massive difference also. Because I've used companies that you had to wholesale broker out to, things like that. And it was the worst communication and you wouldn't get answers and you get the wrong answers. That's one thing that's really cool about Bruce's team. So I want to throw that in there.
Isn't that just the best? Just waiting,
beyond.
Waiting too long to receive a wrong answer.
Yeah.
It's just super.
No response.
and I think one thing I've always trained my team on is they already come with a certain level of professionalism because that's what I look for. The first quality that I look inside someone that I'm putting on my team is, can they be part of the culture and how professional are they? Because when you know that somebody's professional, you're not worried about them showing up late. You're not worried about them not getting back. You're not worried about having SLAs and them not following. And I think the second portion is everybody's your customer. In our business, if you operate from the fact that the LO is your customer. If you're an LO, the processor is your customer. They are only as successful as you are. So you treat everybody with the same way that you would treat the borrower. So you treat the contractor that way. You treat your HUD consultant that way. If you treat everybody like they're a customer, then they feel like they're being serviced.
I love that concept. Thank you for saying that, because so many people don't know the totality of who their customers are.
Yeah.
Really be intentful about thinking about who your customer. If you're a branch manager, your customers are your loan officers.
Yeah.
If you're a regional manager, your customers are your branch managers.
I think you need to take it even farther. I think reality is,
and you can take it farther than that. But I'm talking about
customer.
really drilling down to who is tops on your priority list on a day-to-day basis. It's not just the borrower; it's everybody else involved in the transaction who serves the borrower also.
And that's how you build the relationships and the trust, right? Like when you do the everybody's your customer, that doesn't mean everybody's going to like what you have to say. That doesn't mean that's it. But they know it's coming from a place that if I can service you, I will service you. If I'm telling you that something's not possible, it's because you can trust in it that it's not possible because I've serviced you so well up until this point. And I think that that's how you gain trust with realtors in this circle of influence. That's how you gain trust with the suppliers, with contractors is, if I say that this is when you're going to get paid, this is where you're going to get paid. If I say that I'm going to have a tracking number by this time, you're going to have it by that time. I think that's the first way to operate, and that breaks down those fear factors, right? That's what breaks down, I don't want to do this because I don't really know what I'm doing, and I don't have trust in the people who are doing it.
I want to lean on your expertise a bit, Bruce,
Sure.
to hopefully help some industry professionals here. Like Jonny said, your team's a well-oiled machine. It's all about setting proper expectations. It's all about kind of either breaking down the walls of fear or displacing that fear or disproving that fear, for that matter. But when it comes to specifically construction, because I feel like a lot more people are familiar with renovation loans than are the new construction, the one-time close, things like that. Give us like a top three. What are like the top three things that everybody should be doing within a construction loan transaction to help things go more smoothly than they thought possible?
I would say the first thing is, the financing is the easy part, right? Like, you're going to follow the same regular guidelines of that product. So if it's FHA, you're going to follow the same regular credit guidelines of FHA. If it's VA, you're going to follow those regular guidelines or conventional. Mm-hmm. I would say the main thing and the hardest thing for everybody is, we're able to go to high LTVs and lower credit scores at a 700 or at a 5% down or via 100%, is because it's a one-time close. And the easiest thing for people to know is, you have to have it all figured out before you start it. Like, you got to know what you're building, right? Because once the appraisal happens, there's no, we had an appraisal, we started construction. You know what? Instead of having 2.5 bathrooms, I think we're going to go with 2 bathrooms and build another bedroom. Right. And I think that's always the biggest struggle.
That never happens though, does it, Bruce?
Well, I knock on wood, I would say that when we have so much of these upfront conversations, that we don't, like, I get asked all the time, do you have a contingency? You're building a new home. If you have a great builder, they know what the cost is. They know what they're building. They know if there's anything known to be underneath the dirt. Why would you need 10 or 15% of just in case this comes up? We've never had a file, and I've probably done 125 of these just over the last 2.5 years, 3 years between, not counting COVID in between. We've never had a project where they just didn't have enough money. And I think the plus in it is that brings comfort to the borrower. Like, these products bring comfort to the borrower. When you're doing a 2-time close, it's nothing for a contractor to come back and say, this is not enough, you need XYZ, and then the bank to add money. But when you're doing this and it's set, the borrower's only focus is that the dream they've already laid out is now being executed. And that brings a certain comfort to everybody involved in the transaction.
I was leaning more towards the fact that we were going to do carpet. Now we decided we're going to do hardwood. We were going to do with a steel roof. Now we're going to put up dormers. That's got to happen more often than not.
Because, Bruce, I just want to build whatever I want whenever I want
happens.
it.
If you want the truth, that happens in renovation. It doesn't.
I got $600,000 in the bank. I can do whatever I want.
Yeah. I gotta tell you,
I'm going to put up a fountain in the front.
You would be. It's funny. I'll get a call, and it'll be from a Hug and Sultan who just did an inspection, and we may be doing a $60,000 kitchen, and then they'll be like, "Oh, there's an addition being built on," and I'm like, "An addition?" And I'm like, "Who's paying for that?" And they're like, "Oh, they're paying for it out of their pocket." Well, are they paying the same contractor? And then that's when it becomes an issue, because now you have a contractor who's now adhered to a contract outside of us, who may be like, I'm not finished in this kitchen that you guys closed the loan on until I get paid for this addition that's on the second, right? But with the CTP, it's just once the appraisal comes in and you go to the borrowers and that's set, it really doesn't. And if they want those changes, they pay for them out of pocket. You know, they bring us these changes and say, this is what we want to do. and then they pay for them out of pocket. But I would say, like, I mean, look, if you can't sell 5%, or if you can't sell 3.5% down with a 640 credit score and you can build a new house, I don't think you can sell anything.
But you do VA and USDA also.
Yes.
So you're looking at zero down in those cases, right?
So it's zero down in those cases. But let's just say like the regular borrower, because not everybody's a vet, but if you can put down 3.5% and have a 640 credit score, and build a new house,
it's one of those things,
including lot acquisition or land acquisition, correct?
Exactly. That solves all of the supply issues that we've been having in the real estate industry.
Yeah,
somebody's open to building something for themselves. Now, don't get me wrong. This is not gonna solve problems for buyers who need to buy a house in short order. Because they need a place to live. But that's going to be the minority of people. The majority of people are looking for, whether it's a starter home or a move-up home, it doesn't matter because you're choosing what you build, right?
Yeah.
Mike, you brought up a really good point. So, Bruce, what is the average? So is it a regional thing? Is there an average across the country?
Oh yeah, I would say that it's a regional thing, right? So the way I see CTP is Midwest, Texas, Arizona, California, Florida, North Carolina, South Carolina, right? You're going to get into those places that aren't as dense, that are expanding outside of, I mean, I'm sure, as you know, Johnny, like any place within 100 miles of Dallas is hot, right? So Texas is booming in new construction.
Dallas?
Yeah, in Texas, where
I've heard of Dallas. I think that's up north of me.
Yeah, so it is regional. So Reno, and the great thing about it is Reno brings something in areas where there's not CTP, and CTP brings something in areas where Reno's not needed. In Texas, you don't need to renovate. You can just go buy a lot in the same town and build a new house. In Jersey, it's a lot more dense.
Oh, good.
Right? So you're not going to be doing new construction in Jersey. You're going to be finding something and adding an addition to it, or redoing the house and rehabbing it. So yeah, a lot of it is regional, but that's the plus. You have, if you go across the country and you're looking for somebody who wants to make something their own, whether it's new construction or whether it's reno. If you're in Chicago, you're doing reno. If you're in St. Louis, you're doing new construction. If you're in Northern California, you're doing new construction. If you're in LA, you're probably doing renovation. Sure. Like there's a product depending on density for it, but you offer them all at 3.5% down.
It all depends on where the land is available, right?
Yeah.
Yeah.
Can I put you on the spot real quick, Bruce?
Sure.
So my understanding is I've always been underneath the belief that, and I, like you said, I'm here in Texas. So I've always been underneath the belief that to do a traditional Fannie construction to perm, that you have to abide by the 10-acre thing. And I've been told that it's up to 30 acres now. So that's part A of my first question is, what is that size? The second part of my question, I know it has something to do with comps, and I want you to talk about that. But the second part of my question with that one is what is the percentage of land value compared to building value when you do that?
So to answer your question is, it really just depends on the comparables, right? Like if it's
standard for the area.
Yeah, if it's a part of a city where everybody's sitting on 20-acre lots, then it's an easier sell than if this is just one house out of 30 or 40 houses that only match the comps. I would say that, there's always the ideal of thinking about getting an exception from Fannie depending on it, but the appraiser and the value thing is, they are going to value, they're not going to value the land. They're going to do the comps. And you're going to hurt yourself more with that amount of land than you will gain, because it's just not going to be comps. And appraisals, as I'm sure you guys know, even on regular loans, are more likely to be more conservative about how they're giving the values than they are to be more flexible or aggressive.
Got it.
That makes sense.
I would also add that, like, one of the things that I know is maybe not a topic that everybody wants to talk about, but during COVID, almost every state shut down foreclosures and all those items for a year and a half. Over the next 2 years, all those homes are going to be coming on the market. And that's going to be a big renovation boom. I really believe.
I've heard a lot about shadow inventory. We'll see.
Yeah.
We'll see how that's handled.
Yeah, but we keep it. I personally, I don't believe in it, and I see and read what the numbers are expected and what they are and things like that. The other issue with it is they keep saying it's going to be in the third quarter of this year. Now the fourth quarter of this year, we're halfway through the fourth quarter of this year, and we're still not talking about it. So I'm not buying into that one.
All I know is that like there are a certain number of defaults that could be foreclosed upon right now that haven't been because of many different reasons. And regardless of how many of those there are waiting, it still takes a lot of time and money for a bank to foreclose on a home. So
massive.
I really don't think that we're going to see a flood of those hit the market.
No, I don't think. I'm speaking like the end.
It could trickle out over the next few years, and that could help.
I think it'll be
even
like
out supply and demand a little bit, but
I think it'll be like the end of next year, and I think what you'll find, to your point, that I'm not even talking about those are in default that's getting the foreclosures. There's tons that haven't even made it to default yet that would have defaulted if without COVID, right? So you take a place like New Jersey, and it was on pause for almost 16 months. And in Jersey, more not like other places, but like a lot of other big cities, they're empty. These aren't ones who are defaulted where you got to get people out. A lot of these are people who just left and abandoned the house. Mm-hmm. I think that that's where it's going to land. Not the people that you got to foreclose on and get out of the house and do all those things, but on all the properties during COVID when people weren't getting income or not working or those things, and they just left their house. And in New Jersey and Philadelphia, it's a pretty large number.
So what I'm hearing from you is that this may be a thing. I don't want to say it's a problem, because a problem for one person is fortunate for another.
Exactly.
But one man's trash is another man's treasure type of thing. But what I am hearing is that there could be renovation opportunities regionally in pockets of the nation. And if you're a loan officer who is in one of those pockets of the nation, to where what you're hearing about Bruce talking about makes you think, there's a neighborhood right over there. Like if that exists around you, that could be an opportunity for you to leverage renovation lending in order to really do some business in that area.
Loan officers should be doing that now like crazy regardless, because no matter what, we're getting to a point to where we all want something shiny and new. And that's what today's consumer is. We're in less of a world. Investors don't have a problem going in and doing, complete remodeling. But if you're going to sell your property, you're not going to get anywhere near full value for it if it is still either original 1973, if it is still titled as a 1984. There's so many things out there. And by using Bruce's products, we talk about this all the time. So not only in Bruce's products, and correct me if I'm wrong with this, Bruce, but in Bruce's products, I can remodel my kitchen and bath because that's what sells houses. I can also remodel my bedrooms or whatever that may be. But I also have the ability to bring my property up to 21st century standards, whether I want double pane, triple pane windows, whether I want solar, whether I want automation. I've got that ability with Bruce's products to make my house not only easier for me, healthier for me, but more desirable to the consumer. Is that accurate, Bruce?
Yeah, I mean, to speak quite frankly, you can take it down to the foundation and build it right back up on the same foundation.
Boom.
That's huge.
Right? Show me somebody else who's doing that.
It's upgrade, update.
We could probably write with that. Just even if you just need a new roof, you can do that. Like imagine paying a business development person just to walk around and say, "Do you need a new roof?"
Wait. Hold on. I didn't know this. So I don't have to take out a minimum of a $50,000 or $60,000 loan?
No. Streamline is a minimum 5,000. It's between 5 and 30.
$5,000.
Yeah,
Our loan officers have the
Streamline K
ability
is
to go out
max
and lend
$35,000.
Yeah.
A Streamline 203K is minimum 5, max 35K, right?
No, I realize that.
Yeah.
Yeah. So, and just to add to the other portion that you were saying is we're getting out of the market where that 1970s tile and all that can sell for more than what it's worth because the market's so hot, someone's just going to pay whatever dollar is. Now we're going further and further into the market where this is going to sit a lot longer because I got to do this and I got to do this. And that's also important to note is just the market's changing.
We could write a Jeff Foxworthy routine about this. If avocado green is part of your color palette, you might need a renovation loan.
Yes. If the towel is pink inside your bathroom,
you might need a renovation loan.
Yes.
I like
it. I would say that, I think the market is changing. I think that due to the environment and the options and HGTV and all these elements that, like most people don't have vision. And now we live in a market when it comes to your house where everybody's getting an ideal of what they would like for it to look like. Like the regular person knows the difference between a modern home and a traditional home. And now they're like, I want this kind of home. Well, you can provide it. Like the bottom line is if you have a realtor or you have a borrower, you can provide them any product. If you're good at these two products, you can provide them anything to get them where they want to be.
Can we put an overlay in there? No shiplap. No ship. We don't loan money on shiplap, period.
We lend in the Jersey Shore. We do lend money on shiplap. Okay?
That's funny. I like it. But when you see people walking into home, and I'm sure realtors see this all the time, so this is huge for real estate agents, to either develop a relationship with a loan officer who really knows their stuff when it comes to renovation and construction, or to leverage your current relationships. And at least ask if something's out there, because how many times during an open house is somebody going to say, I love the place, I love the area, I love the neighborhood, I just wish it had that open concept floor plan. I wish it had the chef's kitchen, whatever the heck a chef's kitchen is, just a really nice kitchen, right? But the thing that I love about the 203K, and I've been talking about this for years because I've always been a product guy, is that cost of appliances is included in this. You can just finance awesome apply if you want Viking or Wolf appliances in there, as long as the appraised value comes in. Yeah. As long as the as completed value comes in, you're good.
You want an in-ground pool? Good. You want that outdoor kitchen? Good. You want that 3-season room on the back? You can do it. As long as it appraises, you can do it. I knew
of a loan officer, and this is an idea for anybody, find an arbitrage for your region. I knew of a loan officer in Palm Springs who just called himself the pool man. And that's how he pitched himself to all the real estate agents, because he was an expert in 203Ks and Fannie Mae home styles. And anybody who found a house that they loved, but it didn't have a pool and they wanted one, he would get the loan from all the local realtors, because all he did for the first part of his career was renovation loans to put pools in houses in hot climate areas. And it's so strange when you find an arbitrage like that.
Yeah.
When you find an undervalued opportunity like that, and then you just deliver time and time again, that person who put that pool in, they're probably going to want to refinance in the future. They might have an uncle who's in the market to buy a condo. They might have, like, it's the Amazon thing. Amazon started with books, and all they did was books. And they did them so well that their client base demanded that they start selling other things so they could use their platform for other things. And now look at Amazon. So if you start as the pool man doing only renovation loans in hot climate areas, if you do them well enough, it's only a matter of time until your client base starts demanding that you do standard conventional loans for them.
Yeah, I say all the time, if I was a loan officer and I was in a place that construction was strong, or like not as strong yet, but like in the process of growing. I would go to every realtor's office with a listing of those land listings and say, let's put a sign up and say we're offering 100% financing. If I was in an area that had a lot of renovations, I would walk in with the 5 worst houses that they have inside that office and say, let's have an open house. Let's put up a sign. I can show them what this house could look like. Like, how can you lose with that? Right? No one else is paying attention to those things. No one else is paying attention to the land listings. No one else is paying attention to the 900 square foot house that needs a full renovation. You're in LO, you walk inside that office and like, I saw these 3 listings. Let me market this with you.
That's huge. Jonny, I know you got to stop in a couple of minutes here. We got to let you get back to business, but you got any final thoughts for us here?
I do. When he was saying exactly what he was just saying, I was just thinking, I wish there was some sort of term that was like the riches are in the niches. Oh, wait, there is. Seriously, what a way. Because right now, when everybody is thinking that they're having a hard time, in my opinion, no matter what, this is when the real people flourish like crazy.
Mm-hmm.
But if there was a product out there, if there was a system out there that would set you apart from everybody else in not only your area, but in your state. I mean, this is something that, Bruce, you don't care if I'm in Houston and I loan money in Dallas, do you? As long as I'm licensed?
Nope.
This is something that will set you apart from everybody else in your lending area. And this is something that will, my big thing is helping people. If you're not helping people, you're kind of wasting your time as far as I'm concerned. This is something that helps everybody. This helps your referral partners. This helps homeowners. This helps home sellers. This helps our whole industry. This is something, and since the day I got here and found out about this system, about this product, I have never been so excited about anything else. It makes me want to, get my NMLS going again, because this product that you have, and I keep saying this product, it's this array of products. Yeah. There's nothing else that compares to it.
We could be super fancy and call it a suite of products.
A suite of products.
With an E, S-U-I-T-E. I like it.
Then it's a suite.
Yes, the construction and renovation. Sorry, man, that might be a fancy Orange County.
That's a fancy Orange County word. What are you, one of those housewives of Orange County people or something?
No, but my wife knows all of them. You could ask her about all that stuff.
No, but I appreciate you guys so much every time, Bruce. I am such a fan of yours.
Thank you, Jonny.
I promote you all over the country, everywhere I go, just because it is the greatest suite of products. Anybody can loan money. Anybody has money to lend. Anybody can close a loan in 30 days. Anybody can get a clear to close in 4 days. But when you've got products that actually help people and help the world, and they do it today, and not only that, you have a team that can back it up and walk you through it. I don't even have to know how to spell CTP, and your team will walk me through every single bit and make me look good. Make me look good to my referral partners, my sphere of influence. You can't buy that.
No.
If you're part of AFN and you want to get in contact with Bruce because you're looking to go down this road and cultivate more business with construction and renovation lending, Bruce, where can people get a hold of you?
Bruce Smith at afncorp.com. If it's construction, you can do construction division at afncorp.com. And if it's renovation, you can do renovation division at afncorp.com. And the way my team operates, and most importantly, the way I operate, you can just call me. They don't always just pick up the phone. You can shoot me over an email, or if you got something that you need some advice on, you can just pick up a phone and call me. I am not like one of those. You're
not off limits. I can actually call you and you'll pick up the phone.
Never off limits. Any time of the day, any time of the night.
Awesome. And if anybody out there is not, if anybody out there is not a part of Team AFN and they're interested in looking into making a jump because they really want to be a part of a lender who has all sorts of options like this available to them, contact me or Johnny directly. I'll put our emails in the show notes or in the description of the video on whatever platform that you're watching this on.
My brother, I appreciate you. I'm sorry I got to jump.
Thanks,
No problem. Thanks, Johnny. We appreciate it. Bruce, thank you so much for being on the show today. And
so
that's
before we
brother,
leave,
man.
just one quick question for you, Mike.
Absolutely. Let's actually, Johnny's gone, so we can start talking bad about him now. So, what do you want to know?
Who is your favorite superhero?
My favorite, I'm a Captain America guy.
Really?
Yeah. Something about the golden boy do-gooder.
Well, if I'm Marvel,
who can also beat some ass. I like Captain America.
If I'm Marvel, I would say I'm Wolverine.
Okay.
I guess mostly because I am an introvert, so so that reminds me so much of him.
I like it.
If I had to say overall, barring Marvel, DC, it's Batman probably all day long, and I think it's because he's the only human.
Batman's great. I do like I like Iron Man too. Just kind of the superheroes where their superpower is their brain. Yeah. And they use that to kind of develop things.
Yeah.
I like that.
I grew up into it, loved it.
Yeah.
Was part of the reason why I did what I did in college, why I went to college for writing and stuff like that. It's a fascinating thing that I think people don't, and maybe it's even worse now because of the movies, that people don't understand the role that some of these stories or storylines actually played or mimicked or talked about or predicted.
Yeah. Predicted for sure.
It's not good for we'd have to have like a separate Teams call to talk more in depth about it.
Talk about some of that stuff offline.
Yeah, because that could go into like a 2-hour discussion, but you can't have your background and then not get asked about it. That almost
I appreciate it. I like it. That's why the background exists. It's a little bit of nostalgia, a little bit of color, a little bit of fun. Take us back to our childhoods, because not everything's about work all the time. Yeah. Every once in a while, it's cool to be in a creative space and just look around and zone out for about 5 minutes and remind yourself that between fun and family, there's a lot more to our industry than just. We're serving families. That's what we're doing.
That's it. We're giving people the ability to love what is also their biggest investment. Absolutely.
And the one piece of advice that I always like to give everybody, and this is just like general life advice, especially I have a 9-year-old daughter. I have a 1-year-old son also, but the 9-year-old daughter is really the one that we focus on with stuff like this, because she's in 4th grade and she's a girl, and little girls can be mean. They're horrible little creatures sometimes, man. And she was Spider-Man for Halloween. She didn't want to be Spider-Gwen. She didn't want to be Spider-Woman. She was Spider-Man. That's who she wanted to be. And that was awesome. But she was worried about getting made fun of at school a little bit. And the only piece of advice that I could give her was, honey, it's okay to like what you like.
Oh, look.
It's okay to like things. It's okay to love. It's okay to play. And even as an adult. So I tried to embrace that when I was setting up this space, because I'm coming on the screen and I'm sitting in front of a mic and I'm trying to speak as an authoritative figure in the mortgage lending industry. I feel like my knowledge sets that precedent.
Yeah.
And the message that I deliver speaks for itself. But I'm also wearing a hoodie and a backwards hat, and I'm surrounded by comic books. So a lot of people are going to be turned off by that. And I'm okay with that, because it's okay for me to like things.
Yeah.
It's okay for me to enjoy the things that I like.
I go by the adage of, either you get it or you don't. And getting it means getting everything. Like, there's no element of specific definition, right? Like, it's almost like the same person that may be able to, the same person that can appreciate Jay-Z should also be able to appreciate James Baldwin or Led Zeppelin or 100%. That. That doesn't mean that that's doesn't mean that's their preference. or
Yeah.
that's their choice. But everybody from any walk of life can come and be like, I think Robert De Niro is the greatest actor of all time. And that's a common thing that brings people from different cultures from different likes, from different preferences.
Agreed.
So
and this whole setup here, we can circle that back to your business.
yeah.
Like, this is going to turn some people off. Sure. You have built your entire career on products that mortgage loan officers are historically scared to death of.
Yes.
Is that going to turn people off? Yeah, absolutely. But not everybody has to be for everyone.
No.
You do construction and renovation lending. That's what you do. You're the expert in it. You do it amazingly well.
Thank you.
You know what I mean? But it's one of those things, like the people that want to embrace that and the people that want to work with you, they're going to be well served and they're going to be happy. And at the end of the day, the people that watch my content, the people that enjoy my content, they're going to be well served by it. They're going to be happy. They're going to get value out of it. But neither of us are worried about making things, creating things, or serving everyone, because that's impossible.
No,
not only is that the first path towards doing yourself dirty and being untrue to yourself, but you're never going to be able to make everybody happy. It's just going to water down what you do.
Yeah.
So you may as well stay laser focused on what you love to do and do that well for the people that want to do that with you.
I have a 12-year-old daughter, and I tell her all the time, you can't be everything to everyone.
Nope.
You just can be you.
Absolutely not.
You.
So
don't worry about being everything to everyone. Just be you.
I'm so happy that you wanted to come on the show today. It was awesome. It was awesome talking with you and just meeting somebody who has embraced the idea that I call loan program arbitrage.
Yeah.
Finding something that's undervalued and really going after it and making yourself an expert in that niche, so to speak, and speaking to somebody who's created a successful career on that idea with construction and renovation lending is just, it's proof of concept, man. It's proof is in the pudding. If you do something well that not a whole lot of other people are willing to tackle or embrace, then your business will be secure through the thick and thin and all the ups and downs of this roller coaster ride that is the mortgage industry.
Has happened as long as we've been in the industry.
Yeah.
All right. I would say that it's always a pleasure. You're always one of the most, you're like the commercial, Mike Faraci, the most interesting man on the planet.
I don't know about on the planet, but maybe in my little pocket of the city here
in Orange County.
At the very least, in the corner of this garage, I'm the most interesting man.
All right. Give love to your family. I'm happy you're feeling better.
Thank you.
We will talk soon.
I appreciate it. Thanks a lot, Bruce. And for everybody who's still watching, all of our listener who's left, thank you for watching Fly the Flag podcast or listening to it. If you're on any of the podcast platforms, we do appreciate it. And we'll talk to you next time. Thanks, Bruce.
Thanks.
Take care.